All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. Going to be taking a look here at light sweet crude oil, how I played it this morning, how the interpretation was laid out, and how we were prepared for price to do pretty consistent with what it did. So a couple notable things down here, bottom left under my image. This is a support structure. You can see the market really made this nice trend line higher. We got formation. We got a nice touch here. This line at that point established really provided a nice place to take a long into 82.70, where we were looking from a higher time frame perspective to find potential resistance. And that's what we found. In fact, 82.75 turned out to be the right number based on order flow analysis. We knew that we were looking in and around the level of 82.70 for an opportunity to get short. And that's where we got short, 82.75. Market pulled in really nicely to the rolling VWAP here. So, of course, I'm a big fan of respecting the VWAPs. That's why you see that they are on my chart. So it was pretty easy for me to go from 75 into the rolling VWAP here for a quick 35 ticks. That was kind of straight out of the box, right? So this happened at, what time is this? 8:45, right? So we got together 8 o'clock in the morning. Spoke to my folks in the live analysis room and said to them, hey, listen, we got a pretty firm uptrend running here, taking a pullback here. This could be a high. However, it's a little short of what I'm really looking for. What I'm really looking for is 82.70. Now, more often than not, when we find these levels, we don't just touch them. We normally penetrate through them and, in fact, sometimes even close above them. I don't really care what it does. What I care is, can I find a price disagreement between the buyers and sellers using level 2 data, order flow, and liquidity. And if I can put the pieces of that puzzle together, I should be able to pick a spot inside the price action where I go, okay, I am making a decision to enter the market based on the interaction between buyers and sellers, very specifically at 82.75 in this candle. Okay? So I go, all right, all my criteria is met. The thought process around taking this setup makes sense. Okay? There is, of course, risk, but I know my defined risk. If I come through 82.75 and I pull through this candle, I'm wrong, right? I'm wrong. I'm a big fan of saying, all right, I need to find the candle that when I enter the market, very quickly I know if I'm right or I'm wrong. And if I'm wrong, it's okay, but I just want to get out. And I will wait for it to set up again and then get back in, right? I'll take the stop, I'll take the break even, I'll take a small loss. Boom, out of the market. Got my, sitting on my hands again, waiting for what I want. Well, that's what I wanted. From, 8 o'clock on, we talked about 82.70. Say, hey, this is going to be, perhaps an inflection point for crude. If we can break 82.70 and continue higher, great, we have upside targets. But if we can't, we could definitely find some resistance here and start falling back. So we did, based on price action, specifically taking a look inside this candle, that was the level I got short at, right? So what's my risk? The high of this candle is 80, right? So I'm literally risking about 5 ticks here, okay? I bumped my stop up there a little bit higher to 85. So from my entry to my stop, I was risking 10 ticks. If I was wrong, I was going to lose 10 ticks worth of my position. So short at 85, at 75, got my stop up here at 85, and I'm looking to take a target at the rolling VWAP, right? So what did we say that was? 35, 36 ticks. So my risk reward here, my R is 3.6. I can live with that. Listen, 3's good. Good for me. I mean, I can often work with 2, but I'm happier with 3, without being greedy. And then I know that my next level is the fixed VWAP. Notice once I've determined my higher time frame levels, all I'm looking at now, there's no moving averages, there's all that stuff is off the chart. I'm simply looking at my VWAPs. Why? Volume, weighted, average, price. Okay? There's pretty good chance that throughout the day, price is going to pull back to them. And if my next support level is not down here to 81.60, where do you think price is likely to interact on the way from where I entered towards the way I would love for it to go? Well, probably the rolling VWAP and the fixed VWAP. So here's a 5.1 R, right? 5-to-1 risk reward ratio. Not bad. Okay, not bad. So take profit once, move your stop to break even, and take profit twice. And if price does not penetrate the VWAP, then you don't get any extra of this, which is fine. Now, once price approached the VWAP, I again looked a little deeper into the order flow and looked at the liquidity and looked at the buying and selling transpiring in this very specific candle. Well, guess what? At 82.27, specifically at that price, there was strong interaction between buyers and sellers. Well, guess what? That level held perfectly. We break this pullback, right? So, I mean, these simple trend lines are just kind of marking overall direction. We broke here and retested. We were already short. This is a confirmation to go, hey, good chance that we now go lower. And we did. And we got our VWAPs. But here, very specifically, is where I exited the short trade because I was concerned that this was a valid entry for the market to go higher. And it turned out to be 82.27 provided a level where buyers and sellers interacted, triggering a buying opportunity from the VWAP, which can easily act as support, towards the rolling VWAP, beyond the rolling VWAP, back up to this 82.70 level that we talked about all morning. Okay, I give my traders all the levels I'm looking at on light sweet crude oil. It is the market I'm exclusively trading. Okay, so these are not computer populated pivots. These are not computer populated, prior day, high, low, all that stuff. These are all hand drawn traditional analysis. My hand-drawn traditional analysis told me that 82.70, among other levels, could play a fairly vital role in what price was going to do. So when price is approaching one or many of these vital levels, I need to be prepared to look deeper into what's happening between the buyers and the sellers. Notice all of the indicators on my page have one thing in common: volume. Because genuinely, I only care about volume and price action. Right? That's all I care about. You can keep the rest. On my other screen, I have traditional levels. I have the opening range. I have prior highs and lows. I have pivots. I have all that stuff, right? But on the chart I trade on, I don't want all that stuff because I'm really genuinely want a interaction with bear price action, right? There's a book out there called The Naked Trader, right? And it's not that the guy sits there naked and trades. It's that his chart is naked so that he, the trader, can intellectually connect with the chart without being skewed by too much crap on the chart. I tell my traders all the time, listen, use the screen that I share as reference, trade on a naked chart, or put the absolute minimum of what you feel is necessary. Okay? I'm very interested in volume because I believe that volume precedes price action or volume supports price action. So for me, I use volume to anticipate what could come next, and I also use volume to avoid or enter trades, right? Like that, it's a confirming asset to me. So volume is very important. So pull back down again. We get this long setup right here off of the VWAP, push all the way back up to the 8270 level. Once again, right at 8270, interaction between buyers and sellers says, hey, pretty good chance sellers are in control. We squat back down to the rolling VWAP, and just notice we had this kind of nice wide price action, but what's happening? It's getting tighter and tighter and tighter and tighter. So you have to take profit faster and faster and faster and mitigate risk faster and faster and faster. So for me, I didn't trade any of this backside, but I did trade this move right here. Right? I really liked my level at 8270. I really liked this candle setup here. Right? Notice that as we kind of started coming in, that volume itself started dropping. Right? That's not a good sign. If we're going to push through a level very quickly, that volume interest should stay right along the way. Okay? It's not a great sign. So that showed me some weakness. Looked inside, looked at the liquidity, looked at the footprint, dialed in right here at 8275 was the very singular level that said, hey, the market should, based off of what the interaction between buyers and sellers, should push lower. Okay, so I know my entry. I know my stop. I'm risking 10 ticks. I know I definitely want to take profit at the rolling VWAP. And then I definitely want to take profit at the fixed VWAP. Pretty simple. One trade, pull profit twice, had anticipations of leaving continual targets back towards 8165. But at the test of the VWAP, particularly at 8227, I had reason to believe that a shift in who was in control of the price had transpired. And that shift told me, hey, don't be greedy, just cover the rest of your position and be done for the day. Okay? I'm a big fan of a one and done kind of day. I don't could I try to bought this back up here? Yep. Could I have diddled with this back here? Yep. I don't want to nickel and dime the market. I just want to come in. I want to find the setup that I like. I want to believe that that setup has integrity. Take the trade. If it fails, so what? Okay. But if it wins, phenomenal. I'm going to just get paid. I'm going to cover, and then because of this interaction here, I decided to exit, and I'm glad I did, because look, price is on its way higher. Okay, we got another level all the way up here. That's probably where it's headed towards, 83.31, right? And that's fine. I'm fine with that. I'm fine with that because I did my job early this morning. Took my profits early this morning. I don't need to micromanage the balance of the day. Now, do I believe that the market was going higher? I mean, if we lost 82.71, just take a look at this trend line. All right, that's the trend line I had drawn. From here to here to here to here to here. Still respecting it. Right? I mean, there's 3 trend lines on this. 1, 2, 3. And it tells you every bit of the story. The reason I encourage a naked chart or a chart with a minimal amount of content on it is because you, as the trader, after you spend tens of thousands of hours staring at the screen, understanding what's happening, when, where, why, you should be the one introducing your analysis, your confirmation technique, your approach, refined, repeatable. And in doing all that, if your screen is cluttered with stuff, it's going to be hard for you to be able to do this. Not only do this, but do this so that you can journal off of it as well. Because not everybody remembers what they did 5 hours ago or 6 hours ago. But this is exactly how the day played out. I took one setup from here down. Okay. In fact, truth be told, I took two setups. Here into here. Took profit here based on price interaction that I saw earlier in this candle. Right, so this is a little earlier. This is like 7:30 in the morning before we got together. I got out, covered most of my position. I did have some runners on thinking, well, if we run short to this, maybe we head to the VWAP. Truth be told, I covered half of my position and the other half got stopped out the profit. And then we pushed up into the level that I was really looking for. And in doing so, I got what I wanted. Took the trade. Took profit once, took profit twice. Again, took a little bit of profit here. The market just had more in it to go. I can't control that. But I knew a few things. Like this trend line was present based off of prior price action. So I knew, we were going to encounter some form of support. If we didn't break through it, that was problematic. I also knew by looking at this candle that there was a chance that the upper part of this candle could very well provide support. And it did. So knowing those things, I knew those things could go wrong for me. And that's okay. It's okay. But this was also nice and clean. And again, I didn't have any other levels to work with other than the VWAPs. So I always use the VWAP. The VWAPs are between any form of support or resistance, trend line, channel structure, whatever. On my chart, the VWAPs always become a layer of either support or resistance, depending on which side I am. And guys, again, keep it simple. Everything that you see on this screen feeds and supports two things: volume and price action. I encourage you, if you don't have a second monitor, split the monitor in half on a separate screen. Put all the jazz that you believe helps you. Moving averages, pivots, whatever software you may be using, okay? And then you're going to take that data, and then as you feel it benefits you, apply it to the chart that you're actually trading on. But you'd be surprised how you start to form a misconception of what the market's doing visually when you are covering it or littering it with too much stuff. So less is more, okay? And at the end of the day, your goal is to, whatever it is you're using to help you, give you an edge in the market, is to really refine that down to only this very small components that you actually need in order to trade. That's the end result. The end result is less is more, because now you've built experience and you will have the ability to say, okay, I've picked my levels, I've identified them, I know exactly the interaction I'm looking for when I get to them, and I can execute on my trades with confidence. So that's a little wrap up of what I did early this morning. Also kind of showing you the other potentials as the market kind of still got choppy, but ultimately maintaining that upward move. Guys, if you enjoyed this video, I please ask you to like it. If you want to see more content like this, I ask you to subscribe to the channel. If I can help you in any way, leave me a message in the comments below. I'll be sure to get back to you. God bless, and I will see you in the next one.